Hey everybody, Smart Silver Stacker here. Hope you're doing well. So I think at this point we're all aware that the silver price has been making some big moves recently, with the spot price of silver rising more than 40% over the course of the past year. But no market moves up in a straight line, least of all silver, one of the most volatile markets of all. And if you think about it from a stacker's perspective, that's actually a very nice feature of silver that periodically we get these sales in the spot price of silver. And I think that right now we are being set up for one of those sales. And it looks like silver could be set up for a fairly significant pullback in the near future, perhaps as early as this Friday. But we'll take a look at the chart of silver and I'll tell you why, and also why a pullback may be just what silver needs to get it ready for the next breakout to new highs. So let's get to it. I do want to say a big thank you for tuning into today's video. If you enjoy it and you get some value from it, please do give it a big thumbs up down below. And while you're at it, why not subscribe to the channel? Did you know SD Bullion is giving away a monster box of 2024 Tree of Life silver coins? Sign up today at sdbullion.com/sweepstakes. Okay, so on the daily chart of silver here, you can see that the silver price has already pulled back from its highs of last week when silver rose as high as $32.71. Today, the price is at $31.13 at the time I'm recording this video. But I want to delve into my forecast here that we may be seeing the price fall even further in fairly short order. Now, before we get too into this, I need to point out I'm by no means a professional technical analyst. None of this is meant as financial advice. Just take it for what it's worth, but it's just my thoughts on the silver market, which I do follow fairly closely. So first, I want to point out how silver began its breakout earlier this year at the end of February and how it advanced and how it's behaved since then. If we go back to the beginning of March, the end of February this year, you can see that the price of silver was down around $22.50. Now, the way it advanced was pretty much a classic Elliot wave appreciation. You can see we had one wave here, then that's the first wave, then we had a bit of a correction, a second wave higher, another correction, and finally the fifth wave was to the previous high earlier this year around $32.50. Then we had a fairly classic Elliott wave correction in an ABC pattern. So you had this first move down, then bounce in the midst of the correction, and finally we dropped back down to around $26.50. That was the lows from back in August. That set us up for another Elliott wave impulse higher, and what we've seen so far, what has played out, is that we've had the first wave, then we've had the first correction, then we had another wave higher, and now it appears that we are in the midst of the next correction, which I believe is going to take us down under $30. And that would, in theory, set us up for the next move higher, which would likely take us beyond the $32.71 level that we hit last week. Now, why do I say that the silver price is likely to drop below $30 on this pullback? After all, the fundamentals continue to support much higher price for silver. We've got a deficit in the physical market. The US is cutting interest rates. China just announced massive stimulus. There's all sorts of reasons why the silver price should be heading higher from where we're at right now. But from a technical standpoint, it looks to me like this sell-off is not complete. Now let's talk about why. Let's take a look at a Fibonacci retracement. Now, this is based on the golden mean, and it gives you an idea of how far markets may pull back during corrective phases. So if we take a look at the first part of the move up starting back in February, and we draw this Elliott wave graph, which we just dropped from the bottom to the peak of the move higher, gives us an idea of how far the price may correct. Now this one pulled back to about the 0.382 level, or a 38.2% retracement. Okay, so that's one example. Now let's take a look at the second wave. How far did that one pull back? So from trough to peak, during that next corrective phase, you actually saw a pullback to the 0.618 level, or a 61.8 retracement. Now that is the level that you typically want to look at as your pullback target in a Fibonacci retracement. Again, this is all based on the golden mean. I'm not going to get too into it. You can look it up on Investopedia if you're curious. This is just looking at how silver has been behaving during this breakout thus far and seeing if we can extrapolate some information to forecast where it might move next. Now, if we draw another one of these Fibonacci retracements from this trough here to this peak, get rid of this previous one here, you can see that once again, it's kind of hard to see with the way the graph is laid out here, but this pulled back once again to the 0.618 level, okay? And that is the crucial level in Fibonacci retracements. Now, if we look at the new impulse wave higher that we are in the midst of right now, beginning in August from a price level of around 2650 or so, and we go from trough to peak, you can see that once again, the silver price pulling back 61.8% before rallying. And then if we draw one more of these retracements from the most recent trough to the most recent peak that we hit last week, to get down to the 61.8% retracement, you would need to see a silver price just above $29.50. Not only would that fit the previous pattern of pulling back to the 61.8% retracement line on this Fibonacci retracement, but also I think that now $30 is a critical support level psychologically, and we may just slightly penetrate that before we resume silver prices move higher. Now, I know I mentioned Friday as a specific date that we needed to keep an eye on. Now, the reason for that is that right now, markets appear to be split. If we look at the CME FedWatch tool here on what the Fed is going to do at its next FOMC meeting, that is that 59% of the market right now is anticipating a 25 basis point rate cut at the next Fed meeting in November, and 41% of the market is anticipating a bigger 50 basis point rate cut like the one that we just got at the September meeting. More easy money is going to mean higher silver prices and higher gold prices. It's going to be very supportive of that. So if this mood shifts one way or the other, you could see a big impact on the silver price. If markets begin to anticipate a smaller rate cut, you're going to see the silver price drop. And if markets begin to anticipate a 50 basis point rate cut as being more likely, you're going to see the silver price rise. And on Friday, a very important piece of economic data will be released. That is going to be the U.S. non-farm payroll report for September. Now, ultimately, I think it's likely that these employment reports are essentially manipulated, cooked, don't represent reality, but they still do drive market behavior in this environment. So it's an important piece of data. Now, if we get a stronger than expected jobs report, which is highly likely given the fact that, you've got an election coming up, the current administration has a vested interest in portraying a strong economic picture here, and they're the ones massaging the data. And that means that the anticipation of more easy money is going to go down, right? The stronger jobs numbers means that investors don't think the Fed needs to be as stimulative. And that's why this Friday, I think that it's very likely on that news, we could see the silver price bottoming, again, probably just under $30. And I will be viewing that as a very nice entry point because I think that's going to be setting us up for the next move higher. The reason I say that is because the jobs numbers, again, are likely not based in reality. And eventually that reality of a weakening U.S. economy is going to become impossible to ignore. And that's when the stimulus is going to begin in earnest. And that's when I think the silver price is going to really start taking out maybe new all-time record highs. But this decline down under $30, according to Elliot wave theory, looks like it could be setting us up for a rally, maybe not to new all-time highs, but maybe to around the $35, $36 level. Then we'll have to see what happens from there. Ultimately, I am very bullish on the price of silver in the long term, so I am continuing to accumulate more. And the dips are nice opportunities to do so. Of course, it's always important to keep in mind that these short-term forecasts are highly speculative. I want to make it very clear that none of this is intended to inform your trading decisions and should not be interpreted as investment advice, but hopefully this gives you some food for thought, makes you think about maybe where the silver price is headed next. But let me know what you think in the comments down below. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.